Hello, everyone, and thanks again for joining me here on the Crypto Weather Channel. Today, we want to take a look at another pattern that we saw here in the forecast model. It is concerning the fixed range volume profile. So, if you draw the volume profile right across a range of the entire market cycle for each market cycle. All right, and then we want to turn off the point of control, right? Because we want to look at where that point of control is over the entire cycle. We're not really concerned with where it is, you know, at any specific point in time. We want to see how it progressed over the entire cycle, and we also want to turn off these bars because we're only concerned with the point of control, over time. So those are just in the way. So we just turn those off as well, right? And then we just made the line yellow, right? So this is the developing point of control, right? And this is what I like to call the lightning volume, right? And basically, it's gonna show you, the point of control. For those of you who don't know, is where the the price point that has the most volume, right, at a particular point in time, right? And so this line is showing where that maximum volume was at any point in time, right? So we draw that across the entire cycle. We did it for each cycle, and then we noticed that whenever a bull market started, right, um, we immediately pulled away from that high volume area, right? So it kind of really signifies that demand just really took off, right, from where everyone got into the market the most, right? Because the point of control is that high volume area, right? And so once that demand really kicks in, we're pulling away from that area at a pretty considerable rate, right, towards the upside. And so for every bull market, we've seen that tends to happen, right? Every bull market, right? And so I've labeled, as always, every bull market with these little location markers, the turquoise location markers here. Every bull market, right? And then the current bull market that we're in, for some reason, we are really struggling, right, to pull away from that point of control, right? So I believe that a lot of it has to do with because we're looking at Bitcoin versus the U.S. dollar, right? So we have to look at you know external economic factors, those factors affecting the U.S. dollar, right? So I believe that a lot of it has to do with the federal funds rate, right? Those interest rates, right? So that's they have been rising, right, for quite some time now, and I feel like that's putting a lot of downwards pressure on that demand right here in this bull market here. It was sort of the same situation back here in 2015. Rates started rising, right? So we had that slow, controlled move towards the upside. We eventually did go ahead and pull off from that point of control here in looks like in November. We really started to pick up the pace there in demand, right, and outpace that supply, right. And so it remains to be seen in this cycle here. Hopefully, it will start to really happen here soon. As you can see here, back in March, right before the bull market was officially announced, right? The we did pull off of that point of control. Also, back in January, we did as well. But as you can see there, the supply, caught up to it very fast, right? And so we established a new point of control in each one of those instances. So hopefully, we'll see some softening conditions with the Fed raising rates there, and we can really see that demand start to kick in towards the end of the year, right? And so that kind of goes back to the reason why we changed our forecast, right? So let's pull up real quick. And actually, I'm going to go down to the daily first, all right? So we can get a little bit of a higher resolution here. All right, and we're going to put a lot of our forecast model indicators back on the chart, right? I cleared it out to make this a little bit easier to explain, but let's go ahead and put a couple of those back on here. Let's put the jet stream back on there, right? And then we're going to put our halvings back on there, right? So we can get ourselves reoriented to where we're trying to be. And then our two forecasts that we made, right? So back in, I believe this was March, around March 12th, right? We had our very first video, episode 1, right? And where we were explaining the overarching concept behind this forecast model, which is the crypto seasons and the jet stream and so forth. So we had projected, right, that we would continue this meteoric rise up towards and above the future halving price, right, into the middle of this year, and then start a slow decline, right, back down to the jet stream towards the end of the year. However, I believe that I failed to underestimated the effects of the federal funds rate, right, and the rising federal funds rate, right. So that's putting a lot of downwards pressure on the Bitcoin price, right. So in May, right, once we established this fact, we changed the forecast, right, to a very more conservative rise along the jet stream here, and then possibly picking up some steam and rising up above the jet stream into later this year, right? And so, because history has shown, right, if history does repeat itself, it doesn't have to, but if it does, we have always come above the future halving price before the halving, right? So I can show you that real quick here. Let's go back to the previous cycle here. All right, as you can see there, up above, way early in this cycle here, up above the future halving price before the halving. Actually, let's go up to the weekly here. All right, up to the weekly. As you can see here, in the first cycle, up above that future halving price, right, well in advance of the halving here, right, and then again, in the second cycle, right, just before the halving, right, just before the halving there, rising up above that and just touching that that future halving price there. All right, and then in the third cycle, the previous cycle here, well in advance, as I stated before, well in advance before the halving there. So we'll definitely keep an eye on the situation and keep you posted as the situation develops. But hopefully, we get some, as I stated before, hopefully we get some softening conditions from the Fed, and we can see that demand start to pick up there. So we will definitely keep you posted. Thanks for watching.